once you know how to do this. You could be in fund management. You can be in prop firm. I mean, there's nothing limiting you. Once you learn how to do this the right way, and you can manage yourself efficiently, effectively, and manage risk properly, there isn't a living soul on this planet that wouldn't be at least interested in see what you're doing. That's the major thing that I want you to understand, because see, you're all trying to get rich real quick, and I'm not promising you that. I've never done that. I've always taught, have modest expectations. Back on baby pips, try to get 25 pips a week. Yeah. 25 pips a week. And if you're risking 2% each trade, it builds up nicely. I shared a spreadsheet that did all the math for you. Oh, here we go. Spreadsheets. Okay. Go back to Friday and show you see what I did. I outlined it in detail. Where the levels were going to be, where it's going to go. Inside day, why happened? You thought I forgot about that. The likelihood of the market not going above Thursday's high and below Thursday's low on the last trading day is highly likely to stay inside the range. So if it's going to stay inside the range, it's going to be what? An inside day. No new positions are going to be pushing the range beyond Thursday's high or below Thursday's low. So right away, we have adjusted our mindset to, we are not looking for a big breakout move, because it's not likely to occur. Why? Because it's the last trading day of the year. It's Friday. And we're in the middle of a small consolidation on the daily chart anyway. Go look at your chart. Go look at the charts I shared. You'll see that. Now, that idea of looking for an inside day forces us to do what? Trade with internal range liquidity. So that means we have to work within the previous day's high and the low. And then anytime we take a trade and we trade outside of a new range, what does that mean? All the levels that I gave you going through the daily, the 4-hour, the 60-minute, the 15-minute, and 5-minute charts, I gave you all the fair value gaps, the discount low and the premium high of each one. And I took you top down into the smallest 5-minute fair value gap. Now, your charts probably don't have it extended through to the PM session. Take those ranges, extend them all the way into the 3 o'clock, into 4 o'clock. And then look at where I was buying. Look at where my stop loss was. 1 tick stop loss. I was not worried about that coming down and hitting my stop loss. Why? Why was I not worried about it? And why did I go in and buy more when it went down to the bottom of that fair value gap on the 5-minute, on the 1-minute chart? Because everything was sitting on that 60-minute discount low of the fair value gap. Look at the range on the 60-minute chart, and where I drew out on those charts that I shared on Twitter, the discount low of that fair value gap. Extend that through into 3 o'clock and 4 o'clock hour. And then, I have to have my notes here. I don't want to say anything incorrectly. If you look at the 11 minutes after 3, everything, your chart should be on New York time. Okay. So you see me doing, because I had premeditated all these conversations. I click on New York, showing you this is New York time. Make sure your charts look like this, because our conversation I'm having right now, which I had planned all this stuff, look at the 11 minutes after 3. Okay. And if it's on New York time, it's going to be 15:11 to 15:13. That's your 1-minute fair value gap. Now, if you look at the low on the 1-minute chart at 15:25, 15:27, and 15:30, respectively in local New York time, that would be 3 o'clock, 25 minutes after, 3 o'clock, 27 minutes after, 3 o'clock, 30 minutes after. Those 3 lows went exactly to the low of that 1-minute fair value gap. It did not need to go beyond that, because we've already rested on the 60-minute discount low of the fair value gap on the hourly chart. We consolidated in that larger fair value gap in that 15-minute time frame. And I layered all those fair value gaps. So in layman's terms, this is what was going on. The market dove deep after my trade in the morning, getting the 5 handles, knowing full well by doing that, it would set the stage for trolls to say, 5 handles, ha ha ha. They're not getting 5 handles consistently, but this is continue our conversation. 5 handles is enough for you to make lots of money. Lots and lots and lots of money. You can make all the money you'd ever need or want can be made off of 5 handles. So don't be discouraged by me or other people showing beyond 5 handles. You have to have something that you can reach for that's realistic. So what happens if you get 5 handles? Trust me, I know I'm going to continue on with the whole why I did not get stopped out. But I have to make this point here. Like I said, I got notes, folks. I'm not going to leave anything untouched. 5 handles can be done 1 time a day easily. You can really do it every session. Morning, afternoon, morning, afternoon, morning, afternoon, morning, afternoon, morning, afternoon. That's 10 trading opportunities per week. If you can nail down 5 handles, how many handles is that over the week? 50. Now, what if you aim for 50, but you just average around 25? Because you're learning and your strike rate, your strike rate is 50-50. Are you failing? No. Your goal, your model is to aim for that. I have a model that I'm looking for when I'm not trading actively forex now, but I was looking for 50 to 75 pips every single week. I could do lots more, clearly, but it was easy for me to do it. It doesn't put pressure on me, and I have lots of ways to get it. I can get it from one setup. I can do 1 shot, 1 kill. If I don't get the 1 shot, 1 kill because I was either not on the charts or I didn't do it right or I just missed the opportunity, whatever, then I have to break that up over the course of one other trading day or multiple trading days or trading sessions. I'm not forcing myself to go in there and try to squeeze an unrealistic expectation of 50 to 75 handles from a day that isn't likely to move that much, which is the point of what Friday's discussion was in the morning. Last trading day of the year, E-mini S&P, it's going to be inside day. It proved to be an inside day. Now, if you can get those 5 handles 1 time a day and you trade Monday through Friday and you don't get caught up in trying to keep up with everybody else on YouTube or whatever other medium out there that's going to lull you into thinking that you need to be doing more because they're still doing something. Oh, this guy over here, he caught 10 handles over here. I got to get in here and do some more because it's really moving today. Stop. Listen, the banks are open from 9 o'clock to 5 o'clock. Monday through Friday, unless it's a bank holiday. And there's money going in those fucking bank accounts all the time. People are going there and making deposits and they're doing withdrawals just because that's all going on. Do you got to run to the bank? You got more money to put in the bank? You got more money to pull out of the bank just because everybody else is doing it. Stop trying to do things because you see business as usual everywhere else. That's them doing their thing. You're running your business. Your business has business hours. What is it? 8:30 to 10:30. If you stay inside those 2 hours, I promise you, all the bullshit that you're struggling with will go away. And if you just wait till the last hour, 3 o'clock to 4, that's it. There's your 3-hour work week. Do 1 scanning on 1 particular day, a medium impact news event or a high impact news event. You look 8:30 to 10:30 in the morning. If you can't find it there, wait till the afternoon. Especially if the morning is shit, you're probably going to have a really good PM session. Something will happen real easy because it likes to give the smart money a cookie, it being the algorithm. So I'm dropping all kinds of diamonds in here, folks. And if you're not taking notes, man, you're really wasting the opportunity. It's being recorded in case you can't be here for the whole time, but just know that this is some really good shit. I would have paid money for this stuff coming up. I actually did lots of it. I lost lots of money in accounts learning this shit. So, but 5 handles, if you do that every single day, that's 25 handles a week. So you can do approach of looking for a swing trade of 25 handles to aim for it. And if you can't find it, if you're not skilled to be able to find a move like that on an hourly chart or 4-hour chart, no problem. Break it up. What happens if you get 2 12.5 handle moves? There's nothing wrong with that. You can find that on a 15-minute chart. But what happens if you don't have that much skill to do it like that either, and you're really trying to do that 1-minute chart because you don't like to be in there too long? You want to get in there, do your surgical strikes, and get out because you're scared and you haven't built up enough confidence yet. I understand, no problem. Go for 5. Personally, I go 5.25. Caleb, that's his model. He does 5.25. So once he gets 5.25, he's done. He's not looking at the charts no more. He's done. And I can't get him to sit with me anymore after that. Once he's done, he's done. I'm like, now watch this. Now, Dad, I'm done. I'm like, but I want to show him some more shit. He's like, Dad, you told me. I'm like, I know, but I just love this shit. I want you to see this. But I get really passionate about it. And even though he's still growing in his understanding, I want him to be sick, like a monster. Like I want to take what I have in my head and put it in him. And with his youth, and he has a lot of the things that I have too. Like you tell him no, he's going to find a way to do it. You tell him he can't, he's going to find 12 ways he can. So I know if I can instill what I know in him, he will make me look like a neophyte because he has the time doing more of what I already know. It's very hard for me to manage it because I don't want to push too hard and like drive him nuts, but I also don't want to be so hands off that he limits himself. You know what I mean? So it's like I'm an ICT and dad competing to be the better of the each. You know, I want to be the best dad I can by not forcing it on him, and I want to be typical me, ICT, where I want to cram it down your throat, and it's over and over and over and over again, too much, and now you're choking on it, and you're going to have it my way, you know. So it's very hard for me to manage that. So, but as a 5-handle trader, that's a realistic expectation for you to have. And if you're really, really new, by doing tape reading, you can grow in your confidence and say, okay, I see a setup that might yield 5 handles. But what happens if I go in and I get in the move and I get out with 2 3/4 and I just get out and I watch it go to 5, and then I do the same thing in the afternoon? Guess what that is? It's 5 handles, and you don't have that much time in the marketplace. It lets you get in and get out. It rewards you, and you grow in your confidence. Is there something wrong with that? No, not if you are so new as a trader that your experience level doesn't permit you the confidence or comfort, let's say it that way, to be in the risk that's associated with being in the market live. So you put your toe in the water, you feel if it's too hot, if it's moving around real quick, you go in, get your 2 3/4 move, and then bail out and watch and see if it goes to the 5 handles. And if it does, you'll grow in your confidence. Okay, if I just would have held on to it, it would have done that. Not thinking, oh, I wish I would have held on to it. Why'd I do that? No, see, it's how you log and journal. You retain the positives and you don't record any of the negative stuff. Because when you record it in your journal, negative, your subconscious retains that. And you anchor a toxic event around something you're trying to grow as a positive investment for your life. So you're shooting yourself in the foot, basically. You're trying to turn something you've been motivated to do for a positive thing, you're turning it toxic without realizing it. So that's why you're sugarcoating all of your journal experiences. You want it to be a love story to yourself. You're writing a love note to yourself every trading day, and you're doing it through charts. You're showing charts, and you're putting little, I love what I'm doing. This is great that I can see this. And you're retaining that. Your brain loves that kind of stuff. Your brain loves it. It releases chemicals into your body that remembers it better than just the static memory of it alone. Think about it. When you went to a movie, maybe you've already seen this movie, okay? And you went there and you saw it with your friends. You saw it was all right. Okay, and you're meeting this girl or significant other, and they say, hey, look, I really would like to see this movie. And you're thinking, oh, fuck, I've already seen this movie. All right, well, they want to go. I don't want to be a jerk. Let's just go with them. And you go to the movie, and you have a great time. They're holding their hand, and they're, the experience there. And now all of a sudden, that movie has a positive attachment to your memory versus, yeah, I saw it. It was all right. Now, you got somebody that's nice to you, that smells next to you. It's like beautiful. And it's a totally different experience. And now you add to it what? All the embellishments of what happens after the movie without being crude. And it doesn't necessarily mean the bedroom either. Going to a dinner, taking a walk and saying that was a great movie. I love having time with you. All those things are positive things that you're remembering. When you break up with people, as painful as it is to think about the things that caused that breakup, when you're not with them and they come to mind, what do you think of? I miss them when I used to do this with them. And you miss that. You ache because you made what? A positive memory about that moment with that person. And every time you think about that song when it comes on, that's why it hurts. Because you can't plug into that good feeling anymore. You've been cut off. So you don't ever want to invite that shit in your journaling. Journaling is always positive. You never, ever, ever say anything negative in your journaling, ever. Even if you did something wrong, you say, okay, this was an amazing opportunity for me to get the insights for when the market does this. You see how I just did there? I discharged and disarmed any possible chance for me to look at that losing trade or an idea that I thought would have panned out in the marketplace that was, perfect example, CPI. You saw two instances where I co-signed. I didn't have to do it, but I wanted to prove to you, this is what I would expect right now. And it didn't do it. It just went right up the other way, or the other way, going down. There was another time earlier in the summer where I did it where Caleb was right next to me and literally was like, wow, that was so quick. But that same instance, I was right about it, but I wouldn't touch it. So that speed of movement and price action on those types of events, if you're wrong, the way you disarm that is say, okay, this is why we don't trade ahead of the CPI number, because it's too violent, it's too one-sided, and it's unforgiving. You can't trade your way out of it. You can't fix it. When the damage is done, it's like a neutron bomb, just boom, it's gone. All living organisms are evaporated. Everything else looks the same except for any living organism is gone. So you don't want to vanquish your trading career on one trading event like a CPI number. And you don't also want to stifle your development by recording highly emotional negativity in your journal entries. And it's easy to do. You feel like you want to do it. Don't go on social media and complain either. Oh, it's stupid so-and-so. Or I made a stupid mistake. I fucked up doing this, doing that. When you do that, you release it and it comes out of you. You think you let go of it, but your subconscious has got a lifeline to that. And it's anchored to your subconscious, and you will not cut it off. And the next time you get in the marketplace, what's going to happen is, all right, I'm getting in a trade. Oh shit, this feels like that last time it did this and this and this, and I, took a bigger hit than I was supposed to. I'm scared. Now you're worried about having a repeat of that same toxic event. That's normal with trading. You're going to have a losing trade. You're going to do something wrong. That's normal. Okay. Every one of us is doing it wrong. Okay. Every single one of us is going to have that. It doesn't mean you can't trade. It doesn't mean you're not profitable. It doesn't mean you have a good system or not a good system. It just means that you're human. But when you get in that trade and now you're starting to think about that other time when I was at band camp and that whole bad experience. I'm not trying to make fun of anybody that went to band camp, but no, I didn't go to band camp. But if you look at the logic of referring back to another trade while you're in that trade, are you managing that trade? No, you're managing fear about another trade that you can't make more on or lose more on.